So let's stay with tariffs. Certain stocks are seeing a large boost under the GOP agenda with a push for deregulation, tax cuts. EventShares has created 3 policy-related ETFs for stocks that are impacted by both the Republican and Democratic Party's agenda. To discuss what impact tariffs could have on the market, we're joined now by Ben Phillips, CIO of EventShares. You have both GOP and DEMS. How do you figure out what the GOP policy position is? I don't know on any given day. It used to be a free market party, and now it isn't anymore.
Sure. Well, there are still some consistent themes in the Republican Party, right? And we look to senior leadership sometimes outside of the White House. So defense is a big one there, right? Deregulation still has a lot of, I think, momentum behind it. And then we have some energy independence in there. We have a little bit of tax reform. So these are big buckets that actually, we're seeing some things materialize.
Here's what I was confused about. We did a lot of news about tariffs on steel and aluminum. When all was said and done, that 5-day period from when President Trump surprised everybody and all those stocks skyrocketed to when they were finally announced with the, big signature.
Sure.
Those stocks were down. They were all down for the week. They had been, the tariffs had been watered down so much, apparently, because of the exclusion of Canada and Mexico, it actually didn't help.
Yeah, well, you look at U.S. Steel, right? So we launched our portfolios mid-October. U.S. Steel is up 65% since then. So there was a lot of buying the rumor, right? These things were telegraphed. I think Trump's been talking about tariffs since he was elected, right? We saw solar tariffs, for example, start talking about it about a year ago. First Solar's doubled since then, but it's really been down year to date. So these things, after the tariffs are implemented, sometimes I think people reset and they kind of sell the news in that case.
U.S. Steel is the biggest holding right now. It didn't start out that way, right? It was equally weighted, and now...
That's right. They're equally weighted every quarter. So in December, it was equally weighted. But given the price appreciation year to date, it's done quite well. It's been the best performer in the portfolio, I think, since launch.
I see cloud-based security companies. I see Virtu Financial, Huntington Ingalls. I don't get what all these do together here and quite how they're so connected to GOP policy.
Sure. Well, defense is a big one, right? And GOP, that's been a long-standing Republican policy. We looked back to Bush years 2000, 2008, and we saw defense be a big driver of alpha for defense stocks given increased defense spending. We're expecting defense spending to keep increasing over the next couple of years, and we think that's going to be a continued tailwind.
But in the Dems, I would argue that the defense company is also the biggest holding, CSRA, which is IT for the U.S. government.
Sure, and they have a lot of government contracting services, too, that are outside of defense and non-defense related and just general government. That's kind of a larger government spending, higher budget and government that's going to be driving those stocks.
To Michelle's point about unpredictability of policy, would you expect churn within these to be more active than other ETFs?
I think we planned on them being quarterly rebalancing and trying to stick to that, but they are active, and we've had to make a change about once a month that's pretty material. So we've had to remove 3-4 stocks here in each portfolio and replace them.
Is there a good example of that?
Well, Virtu is one that appreciated a lot. The story played out there, and we sold some.
But that's on valuation.
That's on valuation. Well, we're still a fundamentally driven portfolio with policy catalysts. So it's a traditional active management approach. We look to policy as a leading indicator for changes to companies and industries. And it's a very good leading indicator, actually, and it's something that, even Harvard has studied in the past. We just are the first ones to really institutionalize it.
In the Democratic portfolio, you can go short in some of these.
We can short
as well.
In all the portfolios.
You're short Goldman Sachs in the Dems portfolio. I mean,
that's right. And tough one is my former employer. So that one is just a big bank that we think could potentially suffer from increased financial regulation from the Democratic Party in the future. So that is a strategic short.
Do you see much more interest? We looked at volume on both of these. There's not much volume in either one of them, but certainly the GOP one has more volume than the Democratic one.
That's right.
That would make sense under this.
Yeah, and we launched the tax reform fund, and that was kind of when tax reform was being talked about, and I think that saw the best, asset gathering and performance initially. GOP is really seeing the strongest performance now. It's up 14% versus our benchmark, the mid-cap index, up 7%. So this is since October. This is 5 months. That's a huge delta, and it's really policy-driven in this case.
As we get closer to the midterms, would you expect that volume to change? I mean, depending on polls or not?
So our research and looking at kind of past election cycles shows that they do have some correlation with the polls. So we saw it before the election. We saw kind of the Dems basket trending up, and we saw GOP selling off. And then there was a big reversal on the election day, obviously.
All right. Ben, thanks so much.
Thanks for having me.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.